Good afternoon, ladies and gentlemen, and welcome one and all to this afternoon's Non-Farm Payroll live trading event. Glad to see everybody in the room. Nice busy turnout. Hope everyone's doing well today. Ready to go for the action ahead, or so we hope. We are going to get stuck into the data in a moment. Hey, Core Team, good afternoon to you. Hey, James. Hey, Kai. Good to see you, buddy. We got Ryan in the room. Good to see you, man. We've got AB as well. Davison, Scotty D, H&C, Matthew. Hello there. Lots and lots of folks. Good to see you all, guys. So it's been a pretty, I would say, even week this week so far. We haven't seen anything huge happen. We've had some pretty decent, I would say, trading volume comparatively speaking over previous years at this same period in the US stock markets, which has been okay. It's been a little bit difficult to navigate. Unfortunately, the NAS 100 is trading in some pretty complex parts at the moment. We'll dig into that down the line here, but we may have to avoid the NAS 100 this afternoon. I will list my thoughts on that one anyway. So as we always do, we're going to dig into the data first and foremost, look at what the US employment numbers are going to be looking like this afternoon, have a think about the miss on the numbers, have a think about the beat on the numbers, and then load ourselves up with a few trading opportunities. I have been on the fence about reintroducing Forex and metals into the mix this week, just in light of the fact of the time of the year that it is. But I have decided that I am indeed going to do it. So we are going to be looking at Euro USD, USD CAD. We're going to be looking at gold. And then we're going to be taking a good dive into the US 30 Dow Jones, the NAS 100 and the S&P. I've already said probably going to avoid the NAS 100 anyway, but we're still going to look at it nevertheless. So let's get going. Right on. So yeah, let's have a look at the data then first of all. So where are we over here? So this afternoon then, non-farm payrolls are forecast at 60k. This is a reduction by 4,000 jobs being added over the previous figure, which is 64. Unemployment rate of 4.5%, which is 0.1% reduction over the previous figure, and the average hourly earnings is apparently going to rise to 0.3, up from a 0.1% previous figure. Now, what this shows, apart from the earnings, is that data is stable. We're not looking at anything major sort of deviating from those previous jobs numbers and even the ones before that as well. It's been a very, very quiet time for the NAS 100. For the NAS 100 for the NAS 100. Still got the NAS on my mind for the US employment numbers. So ultimately, this would lend us to believe that this afternoon may not actually be too action-packed. And for those of you, obviously, who are with me on a daily basis, we already kind of touched on this yesterday. So the time at the moment's 1:15. We got 15 minutes to go before the data is released, which is the perfect amount of time to get stuck in to the charts. So let's go. Okay, cool. Right. Looking at the charts then, we've got yeah, I don't want to do the NAS 100, to be honest. I'm sticking by that. I mean, at the moment I mean, yesterday, for those of you who are not with us every single day, yesterday we decided to avoid the NAS 100 because of where it was trading, and we're actually trading directly at the same level again today. Lo and behold, obviously, the NAS 100 was the best mover yesterday, as it usually happens. I mean, we might do, but I'm not going to procrastinate with it too much. Let's work up from the bottom. So first of all, we've got the USD CAD. USD CAD at the moment, daily time frame, check the anchor charts. Really nice big bullish move here. We've got a point of liquidity in and around there. I would say just a touch lower, actually, is really the true point. That's where we are at the moment. So this is a nice retest of this area here that's been previously generated. We do have a lot of resistance on top of price at the moment. There's a lot of cash in the market at around 38.90 to 39. So it would make sense that we're going to get a bit of a rejection from there. But obviously, this is just a technical analysis. It's not. It's nothing to do with the fundamentals, which are going to be driving the markets forward this afternoon. Looking back down at the 15-minute time frame, that daily zone, it's not too scary. So we probably could say to ourselves, look, if we get a nice break, close, and retest. I don't think we're going to get any kind of retest this afternoon, so that's a bit redundant, isn't it? We've got nothing to work with in recent history as well. So I think we're just going to have to go for the clear breakout. So we're looking at a break of the high, which is going to be that level there. Ultimately looking to take the market right the way up to 139.20. I wouldn't have it directly up there. I think it's a bit of a stretch. But we could see, let's say, entry target there and then the stop loss, which is going to yield us around a 1 to 3, I would imagine. Now, with the strikeout that we're going to get, we are going to be affected by things like slippage. Of course, it's a right pain in the ass, but it is what it is. It's just one of those costs of business that we have to deal with here. And your 1 to 3 is probably going to be reduced to around a 1 to 2.4 to 1 to 2.5. Something around those lines. So that would be the USD CAD trade this afternoon. The short, we've got a nice margin for the target profit. That one is there. We've got double highs. We've got the nice retest. Nice big commercial leg up from that point on. So it's a pretty decent grab. We've got an ascending level. Worth noting. Rising up through the lows. That's nice as well. We need to work out where the break of structure is going to be. I'm thinking about there because by the time we get down to the previous low, we're already going to be quids in, aren't we? And that leaves a nice amount of margin in there for the trade to flex and breathe. So I'm going to go for a short target profit down at that area in here, and a stop loss is going to be very, very aggressive here. We're actually going to look at around a 1 to 4 fixed on that one. So that's going to be the USD CAD setup. Download and upload. Boom, there we go. USD CAD, number 1. Right, Euro USD. Let's get to the second. So, first of all, anchor chart. Always look at things on the high time frames. Consolidate that noise. Very similar to the USD CAD. The roles are reversed, obviously. We're not a USD prime on this instrument. We're actually the second. So we are just breaking below a point of liquidity in here. We've got a pretty decent area in there, don't we? That's not bad. Yeah, that's not too bad. Let's have a look at the availability. Yeah, that will work, definitely. All right, cool. So what we're going to look at is a break of structure below the low here. So make sure that we clear out any of the dead liquidity. We get the breakout below that level. This is a hefty trade. I don't want to take it right down to the 16.15 area. So I'm going to go for a 1 to 3.6 in there as the short. Now, for the long, we're just out of luck, guys. And that's just the truth of it. I'm not, regardless of fundamentals, regardless of the news event or anything, we're trading below on a 15-minute time frame, a big point of liquidity in here. I'm just not in the nature of doing that today. I'm not feeling it. I may do it at some point in the year, but definitely not today. So we're going to stick with the short on the Euro USD and be happy about it. Copy and paste over to you guys there. Next up, we're going to go work on gold. So gold at the moment, been pretty decent this week. Not been absolutely mind-blowing. We've had some semi-decent moves. We started the week very strong. It has been range-bound since then, though, you can imagine, probably waiting for this afternoon's news. The daily doesn't really give us any additional information over and above the 15-minute time frame at this point in time. We have big high up here. We have the low down here. Yes, we do have the major point of liquidity at around the 43.90 area, which is the daily level that we just looked at. But I think the true margins kind of sit between these areas. It's not looking great where it is at the moment, though, is it? That's a shame. Yeah, it's a bit of a shame. We're kind of right in the middle of nowhere. Just trying to think about how we can utilize that for potential trading opportunity. Obviously, this is a major point of inflection here. I mean, you can all see it. So you don't really want to be targeting 43.90 with the anticipation of a rejection from the previous low. There's no opportunity of taking a long here because, well, one, we have this level right directly above us, and then we've got big liquidity up above that at 44.92. So the margin there is too tight. So it's a bit of a complex one. We don't want to be forcing trades. They have to be worthy, right? Just like the Euro USD. The trade short looks great. Really nice available margins. Everything looks fine on that. But the long doesn't work. So we're not taking it. It's very clear cut. Gold at the moment, I would say that the only thing that looks even potentially viable is a breaker structure short trade from 44.44 down to this area in here. And that does not come without its own set of risks. Something like this and a breakdown below there. We've already seen it works. We've seen this a couple of times. That's kind of irrelevant, but we've seen it works in recent history. So I guess we can look at lining ourselves up with a short between here and down there with our stop losses at around 44.50 for a 1 to 3.5. I don't mind that. In terms of the long, though, I do think we're out of luck, to be honest. We are out of luck on that one. Yeah, which is a shame as well because it doesn't even coincide nicely with the Euro USD. It would be nice if we had a gold long and a Euro USD short. That would make more sense. There's not much we can do about that, unfortunately, is there? So anyway, that's where we are. We may have to look at a market order with gold this afternoon, so we may have to be quick on the trigger, and that's fine if necessary. But right now, we're only planning ahead for a short. Right, let's move on. US indice time. So US 30 Dow Jones again looking really nice today. It's been a theme of the Dow Jones this week. What an incredible breakout that we had yesterday. It's ranged overnight and throughout the Asia session right up into the NFP period this afternoon. Just thinking about that area in there, that is really nice in there. So we've got a very solid low to utilize. We also, does that line up? It doesn't, not quite. That's a little bit of a shame, but we've got that high. We're just going to have to scrap that one for now. And what we'll do is we'll use that as our breaker structure for an additional long. So that can be there. Yeah. So we've got another point, don't we, down here? Just building these charts out at the moment, getting a good idea on available margins. This is a wonderful margin. This is almost a void, isn't it? Right? We've got such nice price action happening through these areas. There's no kind of waiting around. It just pushes straight the way through. So I would like to think that if we get a breakdown below here, it's just going to sink straight to 49.038. On that basis, I'm going to put my money where my mouth is around this one and load ourselves up with a potential short. The risk reward is at a 1 to 3.2. With the addition of the open volatility from the NFP, you're probably looking at around a 1 to 2.8. I'd like to think that the spreads would have really tightened up from the market being up there. By the time it gets down to here, we're probably going to see a bit of contraction when we come into cash at 49.205. By the time we get down to this area, maybe just drop that entry just a little bit further in at a 1 to 3. And we may see the spreads tighten up by that point in time, so we might not get caught by the slippage, which would be nice. For the long, I mean, that's one hell of a no man's land, so we may end up doing a market order on that one as well. I would say the long target is about there. It's not a wildly high target, but it is sufficient because we'll be looking at a very quick in and out trade. Stop loss for this one's going to be about there for a 1 to 2.5. Again, I'd like to think that we're not going to be caught by slippage too badly on this one. We'll be able to make our way through. The no man's land itself is actually really nice. I mean, I'm thinking if we get a drop down into liquidity, we could even buy it back. If it comes down to this area, then gets a bid, we could buy it back through here. If that makes sense. Hopefully it does. So we come down, we reject, we grab the money down in this area of the market. Once we start to see the bid and it breaks structure again through this level, we then execute the trade. I'm going to put that one in there as well as a possibility. That might end up being a market order as well. A couple of market order opportunities here today. Right, NAS 100 is the NAS 100. So let's move down into the S&P. We've currently got about 4 minutes to go before the data releases. Got my eye on the clock, don't worry. S&P 500's not looking amazingly healthy as it did yesterday during the trading hours. It's okay though. We've got a nice high up here and we've got a very decent target profit point. So what we're going to be doing is looking for a straight shot, very clear cut long, straight up to that point in there with our stop loss at around here. The risk reward ratio, you could be breaching the 1.1x number on that one. At a 1 to 2.5 static at the moment, you could be going to a 1 to 1.8 or something like that at the time of it triggering. But that's the safest place for the trade, and so long as we get out with a bit of bank, that's all we should be really caring about at the moment. In terms of the short TP, we've got this area in here which looks quite healthy. I think that looks nice for the most part. We've got a really nice big point of inflection. It's been used twice. Really nice rebound from this area. Retest. This area gets really choppy and really messy during the afternoon. But again, we've sort of reinvigorated our confidence here with the lows that have been formed. And this is today's price action. So not bad. The only problem is, how the hell do we navigate this one? Because, of course, the market's trading at the entry right now. That would be the break of structure. So, and this is on the proviso that the market comes up and hits this area first. So it is what it is. There's nothing that can be done about it. We're just going to have to be very, very hands-on today. It's going to be a busy one. We've got a couple of minutes to go, so we're going to get ready for it in a moment. And copy and paste. Right, team, I've got some numbers to punch in. This is a perfect time to punch any numbers in for trades that you want to be ready with, pending limit orders, and so on and so forth. So just give me a second and we'll get going. We've got about, a couple of minutes to go. All right, team. All right, let's do this. 4, 3, 2, 1. And lift off. Let's go. Let's see what we're at. All right, so we are looking at non-farm payroll. It's a miss in the jobs numbers today. We have a non-farm payroll of 50,000 jobs added, which is a 10K reduction from the analyst's expectations, and a 14,000 jobs reduction from the previous figure. Unemployment rate is at 4.4%, actually. So we've got a bit of a reduction going on. We had a consensus at 4.5, and the actual figure's at 4.4. So we've had a 0.1% reduction in unemployment, and average hourly earnings month-over-month data for December was 0.3, which is exactly bang on with the consensus. Now, the non-farm payroll is the biggest miss out of them all. The unemployment rate, by the way, for Canada is risen to 6.8%. That's a big one, actually. The employment change is at 8.2K as well. That's terrible for the Canadian dollar. So what we're going to do here, let's just go down to the USD CAD and see what's going on with that one. Okay. I suppose the jobs numbers in particular are cancelling each other out, which is the only logical explanation as to why the USD CAD's doing absolutely nothing. The Euro USD, has sank. Got an instantaneous volatility spike. Obviously, gold, completely non-impact event, not doing anything. S&P 500's had the spike and currently running, but not doing much of anything at the moment. And then finally, the US 30 Dow Jones hasn't done anything. Yeah, so as expected, and to be fair, we did anticipate this. We said the same thing yesterday. We said the same thing at the beginning of the session today. It does appear that the stability in the data has caused a complete lack of interest in trading volume this afternoon, and that is to be anticipated. We don't have a great deal of liquidity in the markets anyway. The machine is still charging up. Bearing in mind we are only on the 9th of the year so far, the 9th of January. And on top of that, we have data that falls directly in line or near with consensus figures, analyst expectations. So there's no real need for the markets to move exceptionally as a result of the data this afternoon. It's a shame for us, but it is what it is. Yeah, Kai, you're absolutely right. Yeah, you're absolutely right. If you have any pending orders or anything like that going on at the moment, I would scrap them all, and we will just revert to market orders from here on out. It's completely unnecessary to have anything like this because we're not going to get the trading volume that we need, and we'll just focus on market orders. Yeah, the whole thing's going to be market order orientated, I would say. Even if I might not even decide to take anything and just save it for the US Open this afternoon. We may end up getting a bit of a better result from the US Open. But at the moment, I mean, this is very, very anticlimactic, isn't it? You know, very much so. What's the NAS one? Yeah, it's not done anything, is it? Ah, what a shame. What a shame. You know, I was just saying yesterday, didn't I? I said just yesterday that the NFP, we were having a chat about it, weren't we? How the NFPs, yeah, well, it's just not the one anymore, is it? Yeah, yeah, that's right. Yeah, yeah, it's mostly down to CPI releases. CPI, the new NFP now, because inflation's a hotter subject. Yeah, it's a hotter subject. You know, a lot of preparation goes into these sessions with regards to the NFP. So it's trust me, it's frustrating on my end as well because it's not, it's a lot of work that goes into it, and then it's this big event that happens in the space of 60 seconds, and it's just kind of redundant, isn't it? The S&P's having a bit of a spike though. It's not bad. I might actually double up the exposure and go for the Dow Jones as well. My spreads at the moment are really quite nice. It's not too bad at all. I mean, we're 5 minutes into it now, aren't we? So I'll be able to get a really nice fill on this Dow Jones long. It should be the same for you guys as well. What else we got going on? Gold. Might look at the rejection for the sell-off this afternoon from up at the highs at 49.92. Euro USD, there's nothing I can do about that. Yeah, there's nothing I can do about that one. USD CAD. Yeah, I can only assume that. I mean, this one's just. It's just completely dead. I can only assume that's because the two are cancelling each other out. Yeah, S&P's looking good. And I've still got mine going. Mine's still running. It's not looking bad. I'm interested in this Dow Jones as well. Let's go down to the 1 minute time frame. Get a look at the spicy times down here. Be nice if we got a retest of this area in here, so the market come back down. Push into this area in here, okay? Because this is where the money is. There'll still be money in here, and there'll be a lot of pending orders and limit orders being sent into the market in and around the 49.36 area. So ideally, the market comes back down, grabs those orders. Once it's grabbed those orders, we should start to see a resurgence in bullish activity, which would then take us up to TP at 49.47. Obviously, nice in theory. Never really works out like that, though, does it? We've got. I wouldn't really want to consider the high of that candle as the point for the retest. So I'd be much more keen on looking at this area in here. Whoops. Much more keen on looking at this area in here. That's what I'd want to see, ideally. just to reiterate, guys, I am not going to take the Dow Jones just on a straight shot. Okay, so it can go past here. That's fine. I want to see it. I want to see it pull back first. What's the Nas one? What's it doing? So it's just had a couple of big candles at the moment. Let's go back down to gold. It's had a decent retest of 44.80. Seriously considering the short this afternoon, you know, when things calm down a bit and the market's digested the data more. We've got that level in there, which is a nice retested point. And then we've got the low. Whoops. And then we've got the low. We have a TRF to contend with. Man, that's a lovely little day trade in between there, isn't it? Now that the spreads are tightened up, you couldn't have traded that one successfully anyway because the spreads were whopping. You would have executed the trade at 44.74 and got a fill up at the highs. It is slow, isn't it? It is really slow. We're not really seeing too much of anything going on at the moment. Nah, it's... What do you say? What do you say, you know? What can you do? There's nothing we can do. Same old, James. Yeah, you're right, buddy. You're not wrong. Yeah, you're not wrong, man. Nothing we can do about it. Looking at the DXY is just depressing. Okay. Well. Euro Oz, best move of the afternoon, this one. No. Nothing to do with the US dollar at all. Yeah. Yeah, probably is me too, mate. I don't want to go forcing anything, and neither should any of you. If you feel the need, if anyone feels the need to force a trade or rush into a trade, trust me, it's the wrong trade. Don't do it. And save your capital, preserve the capital at all costs, and wait for this afternoon's for the US Open to take place. These markets need to contract. They need to flex and breathe a little bit before we can get stuck into it. I'm not interested in taking longs up at these highs at the moment. We've come from a low down here on the US 30 Dow Jones, for example, at 49.25. It's already had a really good run. We haven't really had too much of a price action pullback yet. The the NFP Open has been disappointing. It's very stable data. There's no real major surprise elements. It falls directly in line with what everyone already knows. So that's that. We got the S&P looking okay at the moment. Yeah, it's not. Yeah, it's looking okay. It's got a little ways to go yet, to be honest, but it could certainly reach a turning point. We've had closer calls this week, especially in the S&P as well. But yeah, so that's really it then, guys. Are there any? Has anyone got any questions or any assets they want me to look at? You know, it's a two-way street here. I'm more than happy to have a look at anything that you guys have got going on. If you're not fussed and we're just going to go trade the US Open, then that's fine as well. Plan for the Open, Scotty D. I'm going to crack open a bud, mate. That's what that's what I'm going to do. I'm going to open a beer. If you had a short on the S&P and a long on the Dow Jones, would you trade both because they have strong correlation? I believe we have had that exact condition this week where we had a long in one and a short in the other. Or, sorry, Kai, that was the European session yesterday morning, wasn't it? Where we had a long in the, I can't remember what it was now, a long in the DAX and a short in the FTSE, or something along those lines. If you have a long in one and a short in the other, let them go. At the end of the day, you took the trades under you didn't, you took the trades with a good understanding of why I would have hoped so, that you had a good understanding of why you were taking the trades in the first place. So just follow it through. Yeah, just follow it through, buddy. Yeah, just follow it through. Sometimes, yes, they do have a relatively strong correlation, but I would argue that you are closer to the danger line if you're trading a NAS 100 long and an S&P 500 short, because they are significantly correlated because of technology stocks. The US 30 Dow Jones, not so much. And so, yeah, I think I think it's fine. I think that's all right. So, Scotty D, back to your question in all seriousness, sir. A plan for the open this afternoon. I mean, you know what it's like usually. You've been around the block a bit with me on these non-farm payroll days, and then going on to trade the US Open. Generally speaking, what we'll look at is trading the correction of the move. So today, for example, we've had a lot of bullish momentum. Things have been, yeah, exactly, buddy, exactly. There's no way for me to provide a pre-assessment like I would Monday through Thursday, because Monday through Thursday we haven't had a major economic event release. But really, NFP days, it's wait for the market to reach liquidity and then short, or vice versa. If it went, if it started dumping off immediately from the release of the news, then we would wait for the market to reach liquidity and then buy it back. And that would generally be the idea, the consensus. So in this instance, the US 30 Dow Jones will be looking to go short from around 49.48. The NAS 100 will be looking to go short from probably not too far away from where we are right now, I would say. Yeah, I mean, look at that, right? That's a nice point of liquidity in there, without a doubt. So we could even potentially look at shorting the NAS 100 from up at around here. It may want to go the extra mile and go up to this area, because at the end of the day, that is this inflection area here. Underneath it, which is this one, is not actually the point of inflection. It's a nice area of liquidity on the 1 minute time frame, and it is the big point of inflection from this drop, which was on yesterday. But this area here was a previously used point of inflection as well. So I would say it'll be one of these areas where the NAS 100 decides to take a rest, and then you can look to go short it from there. And then the S&P 500, oh, that's nice. Yeah, that's doing all right. Mine's 2 sec. Yeah, mine actually hasn't hit target profit, unfortunately. Mine's still live at the moment. So I do need that to break in. My levels are a little bit different, tiny little bit different on the trading view to my trade stations. So yeah, my S&P target profit on trading view is more up there at 69.52. Yeah, than it is where I've placed it on trading view here. In terms of the S&P 500 though, again, we'll be looking to short it from 69.52, 69.53 back down to around 69.41, and you'll look to short it, from the highs. So that's the strategy. That is what we're looking at this afternoon. Selling into the profit taking. That's what we're doing. Commercial institutions, they would have reaped in the rewards from this afternoon. There'll be a lot of lost dumb money in there. Wait for the profit taking to start taking place. Once the profit taking starts taking place, we then sell into it, ride the run back down to the lows, and get out with some pretty quick wins, hopefully. Just having a little recap on everything else. Gold's almost reached liquidity up there, came very, very close. That's another potential setup, maybe for this afternoon, selling between these two margins. Euro USD, we're not going to be focusing on that at all. And the USD CAD, I don't think there's anything to say about that one either. No. Did end up getting down to the lows here, but still, it's not going to be anything in it for me today. Yeah, that's about it, guys, really. Yeah, that's the best of what I've got, unfortunately, this afternoon. All I can do is, well, I mean, there's not even any point in apologising. It is what it is, isn't it? We've had to deal with this quite a few times now, so we're all in the same boat. It's annoying, but there we have it. So I'm going to wish you all a wonderful rest of your week. Have a fantastic weekend. Hope you have a nice couple of days off. Look forward to catching up with you on Monday. Monday morning, the market report will be back up and running, full capacity. So look out for the market report links on the Monday morning to mid-afternoon, where the market report will be ready and raring for you guys. And good luck in this afternoon's US Open. The trading room is going to be open all day long. Open door policy as always. If you have any questions or anything else that you'd like me to check out, please feel free to do so. That goes out to you guys in the general chat as well. For those of you who aren't daily subscribers, if there's anything that you'd like or want to know more about, please let me know. And yeah, we'll get it sorted. So take care, team. Have a good one, and I'll catch you then. Thanks a lot. Bye-bye.